Hey everyone, welcome back to Corporate Decoder. Today we're cracking open a file from American Century Mutual Funds Inc. and some of their recent fund reports. I know mutual funds don't usually sound exciting, but think of it like this. We are about to uncover whether their balanced fund is truly balanced or whether it's tipping into risky territory. You know the drill, check out our Discord channel. Link is waiting for you in the video description. First, let's establish what we're looking at. These aren't annual reports. They are what's called N-CSRS forms, certified shareholder reports for the 6-month period that ended in April this year. Think of it as a shorter peek into how these funds are doing compared to the usual annual reports. The report starts with a set of semi-annual reports for various classes of the Balanced Fund, Growth Fund, and Heritage Fund. Each fund has different classes like Investor Class, I Class, and Y Class. These classes usually reflect what type of investor the fund is targeting or the way they are sold to investors. You'll often see different fees and expenses as a result. For each class, they give you a hypothetical cost if you invested $10,000. For example, for the Balanced Fund Investor Class, the report estimates the cost for that $10,000 to be $43 or 0.68%. The R5 class is similar to the I class, it's $33 or 0.68%. The R5 class is similar to the I class. This means the I class is slightly cheaper than the investor class. Then we get to some fund statistics. This balance fund across its classes has around $850 million in assets. The management fees for the period were almost $4 million, and the portfolio turnover rate was 42%. This tells us how actively the fund managers are buying and selling investments. A higher turnover can sometimes mean higher costs. For the balanced fund, 42%, it means that during the past 6 months, the fund managers replaced almost half of the fund's holdings. Finally, we get a breakdown of the investments. The balanced fund is, well, pretty balanced. It's mainly in common stocks, 57%, but also has a big chunk in mortgage-backed securities, almost 16%, and almost 10% in corporate bonds. There are also smaller holdings in US Treasuries, mortgage obligations, and the usual things you'd expect from a balanced fund. Then the wheel is spun again for another class and another fund. Next is the growth fund, so let's put our growth goggles on. This fund is far different from the other balanced fund if the name wasn't that obvious, which isn't a bad thing. The growth fund is mostly invested in common stocks, around 99%, with very little in short-term investments and other holdings like exchange-traded funds. Looking at the top sectors, it's heavily tilted towards software, semiconductors, and internet companies, which one could expect for growth. Looking at the fund cost, you have the familiar situation of different costs for different classes, the same for the fees. The last report is for Heritage Fund. The Heritage Fund is also mostly in common stocks, but its top sectors are a little different, with software followed by capital markets and hotels and restaurants. Moving past the fund reports, the document then shifts gears into more standardized SEC filing stuff. It confirms that nothing has changed with their code of ethics, doesn't mention the member of the audit committee, and there are no disagreements with accountants. It states they are effectively filing their required financial accounting procedures to give the board comfort. Essentially, everything's running as expected, ticking all the compliance boxes. The document confirms all its holdings are filed as part of Item 7, Financial Highlights. The report says that their principal executive and financial officers gave the thumbs up to the effectiveness of their financial controls and procedures. Basically, they're saying that their internal financial checkup process is working well and there are no major issues. Finally, the document ends with required certifications, ensuring executives stand behind the accuracy of the report. It's their way of saying we swear this information is correct. Overall, this filing paints a simple picture. These American Century funds are operating smoothly, following established investment strategies, and that everything is running well. But there's always a but, isn't there? The but is, well, this is a snapshot in time, for 6 months in particular. It confirms the fund's following mandated procedures, but it doesn't tell us what is going to happen next. Will the growth fund be able to maintain its returns with risks centered around very few holdings that are highly tech? Will the balanced fund be able to take the hit during a market fall? If you are an investor, you should be able to decide with the information provided here. It's a starting point for any investor looking to make informed decisions, and by knowing what to look for, a starting point for everyone else too. And that does it for our dive into this recent American Century document. What are your thoughts on this collection of reports? Do you feel more informed about where these funds stand? As always, let's chat about it in the comments. Don't forget to subscribe for more looks for all kinds of corporate reports, and please join our Discord channel. Thanks for watching, and I'll see you all in the next Corporate Discords. And please, join our Discord channel. Thanks for watching, and I'll see you all in the next Corporate Discords. And please join our Discord channel. Thanks for watching, and I'll see you all in the next Corporate Discords. And please join Joel, see you all in the next Corporate Decoder.